Welcome back. This week we're talking about green flags and what smart buyers look for with Mat Strangemann, owner of Condo Assist in Calgary. Hey, Matt.
Hi, Thomas. How are you?
I'm good. This is nice. We talk a lot about red flags. It's good to be talking about the positives. Before we get into it, can you tell everyone a bit about your background?
Yeah, sure. So I have been a licensed condo manager, recently licensed as far as 3, 4 years ago when RICA put the licensing condition in, but I've been managing condos for around 11 years. And I've also been able to have the opportunity to sit as a board member on several condos that I've owned. And actually currently am the board president for one of my commercial condos. And I've also had a few chances to be involved in the development and financing of condo projects here in Alberta. So I've gotten like a really good, um, varied view on how condos are operating from an owner view, from a developer view, and from the manager side as well. So I've kind of seen all problems from all the different angles, which has been able to give me a bit of a nuanced look at condos and particularly their documents. And I've kind of channeled that into assisting buyers when they're buying a condo property, kind of leading them through that process. So that's what I've been focusing on the last few years, is kind of giving buyers an edge.
Great. And that's what Condo Assist is all about. So you've seen it from all angles. You're helping people with these decisions. Where do they typically come to you and where does it begin?
Yeah, so generally it comes in two ways. Either they're working with a realtor and they've put in a purchase on a condo and they're at the condition stage where they need to then review the condo documents and eventually waive the condition after thoroughly vetting them. And them and their realtor will reach out to me to get a condo doc review completed, and I'll go through all the documents that are provided, and I'll do an assessment and kind of give them the facts on the condo and tell them whether there's any underlying risks that they should be aware of. Or the buyer might not have a condo yet, and they might come to me for consultation on what to maybe look for before setting in the purchase, and we'll see what documents are available before they give their purchase, and it actually can help buyers, affects the price that they put in on offer, if they know some of these things ahead of time rather than dealing with it during the fallout of the condition stage. We found it can be
What
easier to do that at the start.
it is absolutely, and we've shared that position. As many of you might know, OctoAI runs Eli Report, which is an automated version of Condo Document Review. In Alberta, traditional review is very common, and it is the practice that most realtors and buyers are familiar with. So when we got to know Matt over the last couple of years, we thought it would be great to combine technology with expertise and allow anyone who was running an Eli report to add on a consultation with Matt. So as we're having this conversation and some people are scratching their heads going, wait a minute, you guys do document review. The answer is we do, but we do it a bit differently. And the human expertise that comes with experience and knowing the local market makes a big difference. And that's one of the reasons why we're delighted to work with you, Matt. So just wanted to clear that up for everybody who might be confused why we were talking about condo document review.
Yeah, and it's actually been an incredible experience, and we've gotten a lot of good feedback when we're doing the consultation piece with the Eli clients. Um, just first and foremost, like the condo documents are, there's so many of them, and some of them are so detailed. And what your platform does is amazing at collating all the data and making it a lot easier to digest. And then I can just take it that extra mile and give that nuanced human approach and explain some of the more finer details that really need a market expert to understand or extrapolate from there.
They do, for sure, because data is great, and AI has evolved a lot since we started, and it's getting really great at synthesizing and summarizing information that's unstructured, which is very difficult previously, and it's a very powerful tool, but you lack that expertise and that knowledge. So it is a great fit, and we've had great feedback on it as well. Talk to us a bit, Matt, about the compliance side in Alberta.
Yeah, so when we are reviewing condo documents, um, it's a really good thing to look at how compliant the corporation is. I mean, a condo is made up of a board of directors and typically a management company, unless they're self-managed. And it's that governing body and the management company that they're responsible for ensuring that all the documents are compliant with the standards that have been set out by the Condo Act. As a new buyer or someone, you might not know what those standards are. And there's just a few quick ones that you can look for quite easily that will give you a clear view if the corporation is doing their best to be compliant. So if you go to the next slide, I'll give you guys a few quick tips. So the reserve fund study, this is a very critical document. It's essentially outlining the next 30 years of capital component depreciation in the property and how the condo corporation is actually going to fund all the replacements. Now, you might think that's great. It's a 30-year view. But as we know, things change every day, right? So what you want to look for is if the reserve fund study is in line with the compliance standard of the Condo Property Act, which is 5 years. So every 5 years, without fail, the corporation needs to be going out and completing a brand new study. Every year they can update it if they want. Great corporations do that because even on a yearly basis, you're completing projects and getting the actual tallies for what those cost, and you can re-put those into the formula and kind of keep on your projection. But every 5 years, you need a brand new study.
That's really proactive. I wish we'd see more of that. In fact, British Columbia is just copying Alberta now and putting on a mandatory 5-year cycle because while the recommendation was 3 years, as set out in 2013 here, they could waive it at their AGM, and some communities have been waiving it ever since. So we're taking a page out of Alberta's book here and getting onto a 5-year cycle. Love to hear that some are more proactive than that.
Yeah, no, that's great to hear because it's one of the most important documents. I mean, you want to make sure that the owner before you was paying their portion of the depreciation while they lived in the asset. So when you come in, you're not paying for a 25-year-old roof, you're paying for a roof as old as you've lived there, which is a really neat way that it works. And it gives condos an advantage to even traditional home ownership, where there is at least a bona fide fund where you're setting aside money every month to make sure you can pay for those. When it's home ownership, it might just be your savings account that takes the hit when you get a new roof, right?
So Alberta's straddling the difference here between British Columbia and Ontario. Ontario has an adequate funding requirement, not required to be fully funded, but effectively fully funded over the next couple of years. They're trying to catch up to match their future liabilities in their reserve fund. British Columbia, it is the Wild West. We have a minimum contribution to the reserve fund that is 10% of the operating fund, which of course has nothing to do with how much is actually required for your reserves. So we get special levies constantly here, our terminology for a special assessment. Tell us more in Alberta, what should a buyer expect in terms of the reserve fund and the reserve fund study?
Yeah, I mean, the very first thing, and I will also touch on a little later in the financial section, but you do want to make sure that the condo is contributing the right amount to the reserve fund on a monthly or annual basis. And that's going to be part of the annual budget that gets produced. And the budget line will have an expense line where you're essentially paying yourself, you're transferring money from the operating to the reserve fund. And you want to make sure that that line, the value there and the amount there is matching with what is in the reserve fund study, which would be the secondary report. If those two are deviating, then you might be underfunding yourself.
Perfect. Thank you. Now, you've just started to talk about operating budgets. I see that's number 2.
Yes. Yeah. So the operating budget, another critical document and really important to owners because every year when they get it, it's are my condo fees going to be increasing? But there's a strict compliance where the corporation needs to be furnishing the annual budget to the owners no longer or no earlier than 30 days prior to the year end. So if your year end is December 31st, you should be getting that budget end of November or December 1st, essentially. Right. If they're sending that budget later, it can impact owners on, putting things in place to ensure that they're going to have adequate funding in their bank account for that next monthly withdrawal that's going to be coming out, and it's going to be at a higher rate than it was previously. So if you get the budget with 1 week till your fiscal year end, it can be quite difficult for owners who are either on the fixed income, or if they're using a condo fee account that gets pulled from and they're putting money in there every month. They need to know what that's going to be. So that's really important. And yeah.
I mean, it's great that that notice is there for them. It is typical to expect an increase every year in your operating budget. There are exceptions to that case if you've had some sort of special project that fell under an operating budget, or if all of a sudden you're getting a break on one of the more expensive line items, could be insurance premium softening, etc. But generally, there is an expectation of an annual increase, is there not?
Yep. I like to tell my clients that, before even doing the study, it'll be able to be a bit more clear to me what kind of increases they might be looking at. But even, a rule of thumb of just before you even go out to look at a condo, 5% a year. Just be prepared for that. It could be a lot lower than that. It could be higher than that before, after you look at the documents, something might be glaring. But that's kind of what I look at. Fortunately, this year, condo fees are actually looking pretty stable, at least in Alberta. This is due to actually the removal of the carbon tax. So condo corporations were paying a large utility bill for natural gas and electricity. If you weren't a townhouse style condo where that's borne by the owner, but if you're a corporation that was covering those, actually a large portion was carbon tax. And with that being removed, it's provided room in the budget, because you had budgeted for it last year, that we're seeing corporations come in now and not having to raise fees as much, because any escalating contract prices is just moving into that room that was left there from abolishing the carbon tax. So for once, the last few years, it's been headache after headache with insurance and utilities going up. This year, we actually have some good news for condo owners, that we're seeing condo fees come down, or not come down, but we're seeing the increase lower.
Wonderful, wonderful. Other key documents here, you've got the draft AGM minutes.
Yeah, this is another important one to buyers, because the AGM, when it's held at the AGM, you're actually approving last year's minutes. And previously, if you were going to purchase a condo, you might get the AGM minutes, which were the approved ones, but those could be over, a year to 15 months old at that point. So some of the information in them might just not be as current or relevant anymore. It's always good to review them, because you want to see the temperature of the building going back several years. But what's really great now is that the draft AGM minutes actually have to be sent to the ownership within 60 days of the conclusion of that meeting. So no longer do you just get them approved at the AGM. You actually furnish them to the owners and then approve them at the AGM. But they're out there and they're available for purchasers. So what you can do is, what I often do, one of the first things I look at is I'll go through the documents, I'll see when they held their AGM. And if the minutes should be provided at that point, I'll make sure that they are, or I will at least ask for them and kind of catch them and say, hey, you have a duty here to be compliant to the Condo Property Act. We want to see the AGM from, it was only, 70 days ago, but I want to see those minutes, because it will help inform the buyer.
It really does. This is one of the shocking things when you look across Canada. Ontario does not require disclosure of AGM or meeting minutes to buyers. They're available to an owner, but they are not required as part of their status certificate package, they call the condo documents there. And I find it really surprising, because there is so much that relates to what it's actually like to live in a community that you see within the full reserve fund study. Ontario, you only get a fiscal summary, and the AGM and meeting minutes. All of those things, from whether the elevator is always going out, or whether you've got security issues, or whether there's pest infestations, or so much. I think that it really matters. Are there a lot of noise complaints? Does that reserve fund study indicate that you've got an envelope project that's going to see you under wraps for 6 or 9 months? There's just so much. So I love to hear that Alberta's being even more proactive about getting the AGM documents out within 60 days.
Yeah, it's the AGM minutes are so important, and you kind of highlighted it. But what makes them also really important is that when the board is conducting their general meetings, not their annual general, but just their regular board meetings, a lot of that is, they kind of control the narrative of these meeting minutes. And that's kind of what you're seeing. But at the AGM, owners have the opportunity to go and ask whatever questions they want, and that has to be documented in the minutes. So you're seeing this essentially uncurated angle of the building, for better or for worse. And so as long as, I bring these up, that if the boards are being compliant with these standards set out and the management company is being compliant with these standards set out, there's an acceptance and a trust they're trying to build that they want to do due process, right?
Very, very true. And number 4.
Yeah, this one is a condo additional sheet. It's just a sheet that you definitely want to check when you're buying a condo. It's just going to have any registered instruments on the corporation and when the last time they were registered. It's just important to review this to make sure that when you're looking at the bylaws, it's the most recent registered copy of bylaws. A lot of corporations have had their bylaws redone in the last few years, but if they were done and not registered, then they're not enforceable. As well as after the AGM, if there's a new board where members have turned over, that new board should be registered as well. And if the management company has changed, that would be registered as well. So it's just good to take a look and see if it's being uploaded consistently.
That is good. Each jurisdiction has their own requirements for that. Ontario's are public. Obviously, Alberta has a requirement to file. BC, I think, is further behind on its requirements in that sense.
Yeah. Okay.
Talk to us about consistency.
Yeah, so the way I see consistency, this is just one of those ways that you can get a good feel for how the building operates when you see consistency. And it can kind of come through in a few different forms. One of the most basic ones that I love to see is just the consistency of meetings. So the board is, once elected, it's their duty to convene board meetings and govern the condo through those meetings. And what you'll notice is that some corporations may not be having meetings as frequently. Doesn't necessarily mean that that's a bad thing, but what I love to see is a consistent meeting schedule, whether it's quarterly or every 2 months or monthly, depending on the size of the building. Usually, the bigger the building, the more meetings they're going to have. But a green flag is when you see maybe a smaller building and they're still meeting frequently. It just means that the board is engaged in their duties. They've carved out the time each month to go ahead and complete these meetings. Often they're done, in the evening, where people are kind of giving up time with their family or their hobbies, and they're helping manage the condo. And I mean, they're an owner. They're not being paid to do this. The manager is. So that kind of level of volunteering, it can show really well for a condo. It doesn't mean that there's, not a leaking roof and not a special assessment or something. But if a board is meeting consistently and the minutes of those meetings are being posted consistently, it shows a transparency and, a willing to do their best to at least govern the condo and tackle these challenges day to day. So that's definitely something
like that.
Yeah.
Absolutely agree. Very solid green flag there. I know that most reviewers have a way of trying to convey how consistent meetings are. We've got a little map that shows when we see meeting minutes and when we see other dates that are potentially not meeting minutes but are mentioned therein. And having that evidence and being able to see that the board is meeting consistently is really important. I had an interesting conversation with Greg Bickert of Uniquely and Inspire Property Management recently, Matt. So I'm going to ask you a question on the same theme, which was on efficient decision-making between meetings, because you can't always choose when something's going to happen that requires the attention of the board. How often are your boards, or do you see boards in Alberta making decisions between meetings, and how do they make those decisions official?
Yes, absolutely. The nimbleness of a board is also very important. So, I mean, the meetings are great because it's all documented, and it's a good time to be collaborative and maybe discuss these a little further. But with email, we see it in WhatsApp groups now. There's a lot of discussion that's been taken offline by the board and is happening internally. And what we do is, if say there's a leak and the leak has damaged some sort of component in the building that's very important, the first thing that the manager is doing is informing the board of where the status is, and then, getting estimates for the repair damage. The repairs can't necessarily wait till the next quarterly meeting, right? So everything's laid out, and the board is able to vote on items online through email or through even some of these portals that we've talked about in the past.
Yeah.
And those are then, that's great, and that makes it nimble and flexible, and boards are able to do that now, and it's made it a lot faster.
An official
Which
decision has been
Yeah,
made.
an official decision has been made. What
Right.
you are looking for also on on the side of, how that's reported, is what we do in our meetings, and what I see, as the industry standard, is that a part of the meeting is just ratification of motions that were made between the meeting. That's still really, really important, because the motions need to be captured. So if they're happening offline, you're not going to get the email thread as part of the condo doc minutes. What you should be seeing is, in the minutes, they ratified this motion that they made between the meeting. And some boards, that meet quarterly, might have 10 things to ratify. It doesn't take much time in the minutes because it's already been done. It just needs to be listed so that there's transparency and we can see what's happening.
Fantastic. I'm so glad to hear that there is a similar
Mhm.
method of approaching those
Yeah.
decisions between meetings.
It was extremely important, during COVID and stuff. Like this all got catalyzed and made more readily available. And there was actually, I think, some changes to the Condo Property Act and stuff that were direct results of allowing boards to be able to make those kind of decisions offline. Because it was quite difficult to approve budgets and all this sort of stuff when people weren't meeting yet, and were they even allowed to have electronic meetings? It was Everything that's come out after that has just been a benefit for boards and for the ownership,
Absolutely.
and managers as well. It's made our jobs easier being able to get these decisions done in between.
Cool.
Yeah, and some other things to kind of look for is just like consistency, also in matching data, that um, even, that your condo fees are right, and the minutes are a consistent format, is a green flag. If they're changing formats often, typically, to me, that means that either someone new is taking the minutes each time, or just something there's a bit of a disconnect. It doesn't mean that the information in them isn't as valid, and that's still something you have to 100% look at and dissect and make sure that there's no red flags there. But
Right.
when everything is consistent, it's just another green flag, that it shows that things are just even keel across the board. And then also, like we kind of just talked on earlier about the ratification of stuff in between minutes, it's also really important to see a consistent process of items and issues being brought up, being addressed, being talked about, a solution being found, and then a solution being worked on, and then a solution, and then, completion of that task. That's really important. What I've seen before is something gets brought up and it just lingers on the minutes and it never goes anywhere. And that can be for various reasons. But it's always really good to see that something's being brought up, it's being discussed, and then a solution's found, and then it's completed. And you'll see that on the minutes. It'll be new business, and then it will be old business, and then it will be gone,
Right.
which is great.
That's what you want to see. I think we have heard a lot, Matt, about transparency and how sometimes an owner reports something or requests something, and then it just sort of enters into the realm of the unknown.
Yeah.
So not only on making the decision and having it reach its conclusion, but making sure that the owners understand that it's been resolved is an important thing for the board to do.
Exactly. And sometimes that's harder because not everything an owner brings forward is going to make the meeting. And it certainly can't, or else the meetings would be, days long. But really,
Yeah,
those critical things that should be happening quite quickly, like if you're not missing the mark on getting quotes, and you're stuck with your landscaper again for another year because
yeah.
you're too late to get quote. It's just seeing that kind of that regular consistency of something being brought up, being dealt with, and then being completed.
Excellent.
when possible. Some things take a long time. Condos move slowly. That's just the nature of it.
It is.
So when you see any evidence of speed, it's nice to see.
Wonderful. The financials are super important. Talk us
Yeah.
through what, as an expert who's seen it from the board side, from the manager side, looks at, and how you address and find what evidence is the green flag in this space.
Yeah. So, I mean, as you said, financials are super important. I mean, as a potential condo buyer, what you're essentially doing is buying into a business. They have a balance sheet, profit loss. They have all the statements of a nonprofit corporation. So you're buying into a business. So it can be very, intimidating for a new buyer that might not have an experience in reading financial statements, which is really where, Eli Report and myself can kind of come in handy. It's something that would warrant its own discussion completely, because the financials are so important and there's so many different things to them. But there are some areas that you can look at even as just a new buyer that can kind of start giving you a bit of a bigger picture on how the corporation has handled their financials. So these are some just like really basic things to look for. One of the ones is essentially a healthy contingency in the operating fund. So I'll just quickly explain that corporations, condo corporations, at least in Alberta, typically have two main funds. There's the operating account, where all the condo fees go into, and think of that as your checking account. It's where your bills for month to month are paid out of. Then you'll have your reserve fund account, which is the account that you've been saving money in, and that is going to be only used for reserve fund study projects. Once the money's in there, it can't be commingled back, and that money is only for those projects themselves. And what you want is a corporation with hopefully a healthy balance in both accounts, right? But you want to look at the operating account and think, does this corporation have enough money in there to handle some unexpected events? Every year they're going to do a budget, and it's going to be spelled out how their money should come in and come out. But as we know, unexpected events always happen. We're talking about insurance claims, things breaking that aren't covered under the reserve fund study, legal issues, like things that might not be budgeted for or will come in over budget. Does the corporation have money to save, to spend on those things? And so I usually look at it at least bare minimum. And this is a bit of it's a rule of thumb. There might be reasons why they're under, there might be reasons why they're way over. But if you're just looking at from a new buyer perspective, 3 months float is a good start. So you would look at the annual budget, you would take out what the reserve fund contribution is, because that's just money you're paying yourself. And you would just look at what your monthly spend on keeping the lights on is. Does the corporation have, the ability to cover 3 months of that? That's a good start, right? If they're paycheck to paycheck, what that means is that they're put at risk if something comes up that's outside of the budget. Where is that money going to come from? Right? So
What
you need
happens
to
to
have
this float as you move forward through the next budget year in Alberta, Matt?
So if nothing happened, if the budget goes as expected, the float should stay either the same, or what happens is we see a lot of budgets where the board, it's a nonprofit, so it's a net zero budget, but they've built in things like contingency line items, which give the budget a bit of room that if everything goes as planned, the board should be actually gaining a bit of equity in the account every year. We don't budget for profit, but using contingency line items and being under budget in things like repair, maintenance, like non-contracted services, will make will grow your equity, and that's going to show you why you have more than 3 months then, right, of float. So it could be going up, but if there is a bill from out of nowhere that wasn't expected, if you use your equity to pay for that, and that's fine. I mean, you
Sometimes
bring the
in British
money in to
Columbia,
spend.
we see them approve an extra transfer to their reserve fund at the end of the year to put some of that float effectively aside.
Exactly.
So,
And another thing you can look at for operating health, there's the 3 month rule, which is great. But then there's also, you know, when you think about what bills could really come up, one of the most common ones would be an insurance claim, something that you can't run through the reserve fund, and the board has a large insurance claim to pay. The deductible, can the board cover the deductible? In Alberta, we're seeing deductibles at around 50,000 for water events. That's the max allowable that could be sent back to the owner through a chargeback process. So if you look at the operating budget, or if you look at the balance sheet, if there's not enough money in there for one insurance deductible, then if there's any insured loss this year, that money would have to come from the owners in a cash call or something. They'd have to be flexible to get a loan. So that, if they're a very, very small condo, their 3 months might not cover an insurance deductible. So I'll let clients know that, here's the two things to kind of look for where I see risk if there be an operating fund special assessment.
Good tips. Good tips. You mentioned the information statement earlier. Walk us through what green flags you can get out of there.
Yeah, so the way I like to look at the information statement is it's one of the most important documents that you can get. And the reason why I love it and why it's so important is that it has to be dated. It's created when you order it. So if the owner is selling their property, they're the ones likely asked to get a disclosure letter or information statement. And when they request it, it will be produced by the management company or the board if they're self-managed, and it will have to be for that date. Right. So that means the information they put on it is as current as possible. So you're not looking and trying to extrapolate information from a document that's a year old. You're getting one that's dated right around the sale. So it's fantastic. So you can look at it as if like when you bring your car in for a servicing and they're going to say, yeah, brakes are fine. Windshield looks good. Like it's all these check marks, and you start going down it, and it'll give you some information on if there's any legal proceedings, if the corporation has been sued, or if the corporation is suing anyone, that will be disclosed. It will give you a up-to-date balance on the capital reserve fund. So instead of looking at the balance sheet or going back and seeing last year's audit, they actually are giving you a fairly current date value of the reserve fund, which is great because sometimes we get balance sheets from 6 months ago and a project happened, and it's hard for us to tell where the actual true balance of that reserve fund is, because I love the more recent and current the data, the better.
Absolutely.
Yeah. And also what I see owners catching a lot, or buyers catching a lot right now, is the condo fee amount. So what happens is a property is listed, and then the condo, it might not be sold yet, and then there's a budget change, and the owners are actually not informed, the new owner is not informed that the condo fee has changed. So that's also why I like the compliance. So if the budget is out 30 days, before the new fiscal year, I'll notice that and say, hey, you're owed a new budget here. Your condo fee could have potentially changed. You'll want to make sure what it is before you waive conditions, because you might come in and there might have been a 15% increase in your condo fee between when you went to go purchase it or when it was listed and when you're actually going to take over, and it catches people off guard. So this is another one of those ways that we can ensure that the condo fee is correct. And we also look at it on this statement and compare it to what it is in the budget. Sometimes those are different too, just because of clerical error. But it's like, which one is right? So
yeah.
It will also list special assessments, super important for buyers that are buying, because you want to see if there's a special assessment on the property, because that might influence your sale price or offer.
So these in Alberta in the information statement are those that have been levied.
Yes.
You may find discussion of potential assessments in meeting minutes for the AGM package that you're discussing that have not been levied, but they're clearly talking about it. So it's a threat rather than a certainty at that point.
Exactly. And there's been some misconception, but when the board is talking about it, they're just talking about that's fine. We should be finding that and explaining that to the clients, or they'll see it and they might have an open conversation with the ownership already saying we're looking at a special assessment. Once it's been motioned at the meeting that they're doing the special assessment, it's actually it's then considered levy, even if they motioned it, but it's not due and payable for 12 months. It's still considered levied though, and it should be put in the information statement, even though
What do
it's not
you
payable.
see in the Alberta condo market most frequently when it comes to special assessments? Is it typically the unexpected, or are there things that they're doing proactively, like EV charger installations or other projects?
Mhm. We're seeing the most common special assessment is for reserve fund study that is, or reserve fund making sure that they're properly funded.
Yeah,
Typically because there's a project coming up that maybe wasn't budgeted for yet or was coming up. It was supposed to be due later, so they're front loading a lot of it.
yeah,
That's the most common. Then second would obviously be an operating deficiency where they don't have enough money in operating because they've had several insurance claims. What we noticed a lot recently was hail claims, where the
yeah.
deductible, if it's their second hail claim, the deductible is much higher than the $50,000 that a water claim could be up to.
Yeah.
Um, and then yeah, like that's kind of what we're seeing for EV chargers and things that are not covered under the budget of the reserve fund that are almost considered nice to have improvements. We're not seeing as many of those being funded by special assessment unless the owners have decided to do that.
Right.
We're seeing some condo loans be taken out for something like that, where they're amortizing the cost of that over time. Once again,
Yes.
the loans follow a strict guidance in Alberta. A board is able to take out a condo loan without the ownership signing off on it, up to 15% of what their annual operating revenue is.
Oh,
If
interesting.
it's over that, they do need resolution from the ownership. And if you're doing the
Oh,
loan
wow.
for reasons of uh, like putting an EV charger where there never has been, that should be consulted with the owners as well, because that's not standard operating for them.
Interesting. Yeah, there are some unique provincial differences, I think. You must have the ability to take a loan in your bylaws, and it must be approved in British
Yeah,
Columbia. So,
yeah,
kind of a unique difference there. Nice that the condo boards in Alberta have that flexibility in case of something unexpected.
yeah, yeah. And condos can secure loans at very good rates. Um, they're not exactly putting up the condo as collateral, but just due to the nature of how condo fees are collected and protected in Alberta, I don't think they're
Yes.
as protected in other provinces. But in Alberta, condo fees are essentially like taxes.
Yeah.
You will be able to collect them in almost all circumstances from a delinquent owner through court action if it comes to
Think
it.
that's pretty consistent across Canada.
Yeah,
Different mechanisms, perhaps, but the
exactly. Yeah,
certainty of getting that back is fairly high.
yeah.
Wonderful. So, talk us through this page. You're obviously setting out a calendar year here. Talk to us about it.
Yeah, I think this is just for new owners to kind of see how a year will kind of occur for their ownership when they're buying a condo. And if you kind of understand how it works, it will help you, position when you're buying your condo, what will be readily available to you at that time and what you're kind of entitled to. So corporations all have different fiscal years, but a common one for a lot of people in a lot of cases for a lot of reasons is just the January 1st to December 31st year end. So that's kind of what I've put out here. So January 1st, your fiscal year is starting. If you have new condo fee, that's when they'll be taking effect and essentially the start of the year. By around March, these aren't firm dates, but around March, the board has hopefully put together and completed their audit from the last year. Usually takes 60 to 90 days, and then they can start beginning their AGM date planning so that the AGM coincides with their year end as close as possible. That would be best case. And the ownership needs to be made aware of when the AGM is. So you should be getting notice, minimum, depending on your bylaws, but usually a minimum 14 days in advance, um, more if it's being mailed to you. And then there's the actual AGM itself. That's when I really encourage all owners to go. Um, it's just a great opportunity
Yeah.
to get to meet your board, meet the management, and ask some questions. They're not as bad as everybody thinks. In fact, they're oftentimes actually quite positive, and the ownership kind of collaboratively kind of can set a direction for the next year and give the board if they're not joining it, can kind of give the board a few things that the ownership has said, we want you to look into. And then the board will take that and they'll put it on their next agenda, hopefully. And maybe we'll even see that when we look at the documents, and we can say, look, they're taking the owner's words from the AGM, and here they are putting it on the minutes, and they're starting to discuss it. Another green flag.
Absolutely.
After the AGM, there's that kind of 60-day period, and you should be receiving the draft minutes, and you can review them for any errors or omissions if you attended, and you can kind of let the management company know so that when they go to approve them next year, that those are captured properly. And then lastly, there's the budget. So the budget should be furnished to owners December 1st at the latest, and then you'll get to know if your condo fees are increasing for next year, and you can begin planning on how you're going to set up your finances to kind of cover that increased expense if they're going up.
Fantastic. That's a very helpful calendar. And for those that weren't tuned in earlier, some good potential news this year, and that your reduction, thanks to the elimination of some of the carbon taxes, might keep your budget a little bit closer to what it was last year than normal.
Yeah, exactly. And then I just put this slide, because sometimes there's a lot of negativity surrounding condos that you hear in the media, ownership disputes, sort of stuff like that. But condos are a great investment for many reasons for people, looking to do a few different things in their lives, and, depending on their lifestyle, right? Condos can actually be, a great place to live for many people, or a great investment vehicle. Even myself as a Calgarian, I'm out shoveling my snow every day now, every morning, before I put the kids in the car. And if I was in a condo, I wouldn't have to be doing that. That would all be done for me. Yes, I'd be paying for it with my condo fees, but it would be, through the power of numbers, it would be quite cheap. If I wanted to pay for, single family home snow shoveling, I'd be paying a bit of a premium.
Yeah, no kidding.
Yeah. And, condos, they can offer a more affordable price point, especially for new. If you're buying a new single family detached home, oftentimes you're paying a premium. If you're buying a new condo that's being built, you might be able to enter the market newer. So you can get a newer product at a lower rate, which is really important. And they have great amenities. We're seeing a lot of buildings have gyms now, shared spaces, even just location based, where you're getting, where they're being able to be built. They offer great location, especially here, kind of in places like Calgary and Edmonton. You're seeing it's much harder to get a downtown home, right? But you can get a home in the heart of downtown in a condo, which is great.
Very good point. Very good point.
Yeah.
And we shouldn't take for granted these amenities, right? I mean, the ability to have a pool or a gym and have that cost be shared among all of the ownership group is a real advantage for someone who's going to use it.
Exactly. And having a gym in your home, or close to, on a different floor, is just it's great. You think of times even during COVID when we were stuck inside, depending on the corporation, if they were able to keep the facilities going, it was actually, a great boon to the residents to be living next to the amenities themselves. And just, yeah, being able to close your door, walk away, go on vacation, know everything's being handled, is a real great benefit for a lot of people, and fits a lot of people's lifestyles and remote work, that sort of stuff. Yeah.
Yeah, really great points all around there. There is that built-in community, which is nice. The flip side to any community, of course, is that you are often going to find yourself living with people of a whole bunch of different backgrounds, which makes condo living more interesting.
Yeah.
Yeah, lots of different cultures and people. Matt, you covered a lot today. Thank you for doing that. I love hearing about the good things, the green flags. We do spend an inordinate amount of time talking about the issues that arise in multifamily dwellings of all types. We spend a lot of time thinking about people and pets and parking and all of the things that come with those. But there is a lot to love about condos, and there are hints in the condo documents about which buildings are going to be better for your financial future and you covered those points off very well.
Yeah, thank you. Yeah, it was great to be able to explain those to people. And there's a lot more there, but it's when you see these green flags come up, it starts building a picture, and the overall governance of the building, you can kind of see that clearer with those kind of few things that I noted.
Absolutely. I have thrown up the QR code to go to Condo Assist, connect with Matt there, or when you next run an Eli report, grab the add-on and have that consultation. What Matt will do is review the documents in the report that you're sent, and then arrange a time to have a 30-minute phone call with you, walking through everything that matters about that community and answering your concerns or points of interest about the community or the area, which, of course, given his experience, Matt knows so well. So thank you for joining us today, Matt. I really appreciate it.
Yeah, thank you, Thomas. I really appreciate it. It was a great time.
And next week, we're going to have on Sanjay Maharaj of Electric Asset, joining to discuss all things related to electrical planning, what we call in BC an EV ready plan, and of course, electrification, if you're going to be getting some EV chargers put in. So always something new to talk about in condo land. Thanks again, Matt. We'll speak to you soon.
Thanks, guys.